Hey guys, it's Greg Hardy and I want to welcome you to my channel. I remember a time when I was confused about how much to keep in my checking account or my savings account. I also wondered if my money was in the right place and how much I should have in those accounts. If you've ever felt that same way, you're not alone. Today, we'll clear that up together. In this video, we're going to go over the differences between checking and savings accounts and figure out where your hard-earned cash should go. We'll also cover how much you should keep in each of these accounts to keep your finances in great shape. So whether you're just starting out or you want to get better at managing your money, this guide will help you decide the best way to organize your funds, and hopefully by the end of this video you'll be able to determine how much you should have in each of these accounts. But before we dive in, grab your latest bank statement or app and let's check how much you have in your accounts right now. And while you're at it, don't forget to hit that like button and consider subscribing to this channel if you're wanting to learn more about personal finance. Plus, it helps this video reach more people, and together we can all gain more control over our finances. Now let's get started. A checking account is like your go-to place for everyday money stuff. It's where you keep cash for things like groceries, bills, or grabbing a coffee. With a checking account, you can use a debit card, write checks, or even pay with your phone. Think of it as like your main money hub. You can put money in and take it out whenever you need. Checking accounts usually don't earn much interest though. In fact, according to the national FDIC data from July 15th, 2024, the average checking account interest rate is only 0.08%. Some checking accounts offer rewards or no-fee ATM access. Make sure to pick one that fits your lifestyle. They're also super convenient for managing your daily expenses. It's just an easy way to handle your regular spending. Another great thing about checking accounts is that it keeps your money accessible. You can get to your funds anytime you need them 24/7 without having to worry about penalties or losing interest. It's the perfect place to keep your money for regular use, while savings accounts can handle your longer term savings. The amount that you should keep in your checking account depends on your needs, but a good rule of thumb is to have enough to cover at least 1 to 2 months worth of your expenses. This way, you have a safety net for any unexpected costs, and you won't accidentally overdraft if something comes up. To figure this out, list your monthly expenses and multiply by 2. Or use a budgeting app that can track this for you. It's also smart to keep a little extra as a cushion to avoid any overdraft fees or problems if you need to make a larger than normal purchase. Just make sure you're not keeping too much in there, since savings accounts or other investments might help your money grow faster. Also, since you will probably be using your checking account pretty regularly, it's a good idea to keep a close eye on how much is in there to avoid spending more than you have in the account. So, making sure it's balanced correctly will help you manage your daily expenses much more smoothly while still working towards your financial goals. Think of a savings account like a safe place for your money. It's where you keep cash that you don't need to use right away. You can think of it as a place to stash your money for future goals like a vacation, maybe a new gadget, or just for emergencies. There are regular savings accounts, high-yield savings accounts, and even specialized accounts like money market accounts. Each has its pros and cons. A money market account is a type of savings account that usually offers higher interest rates than regular savings accounts does, making your money grow faster. It works like a mix between a savings account and a checking account. With a money market account, you can earn more interest, but still have easy access to your money when you need it. You can usually write a limited number of checks or use with a debit card in this account, but there might be some limits on how often you can take money out. It is a good option though if you want to save but still want some flexibility. The cool thing about a savings account is that it usually earns interest. Now what I'm referring to is a high yield savings account. If you're not earning at least 4 to 5% on your money, I would find out why. This interest means that your money grows a little bit over time with absolutely no effort on your part. You can still take the money out if you need to, but it's best to leave it in there to build up a little bit. A savings account is great for setting money aside and watching it grow slowly. The main reason to have money in a savings account is for emergencies. Savings can stop a tough situation from turning into a real crisis. For instance, if you face unexpected expenses like home repairs, a rental increase, a car breakdown, fewer work hours, maybe a medical procedure, or you have to travel for a loved one's funeral. Having savings can help you handle them without stress. In a worst case scenario, like losing your income completely, your savings can give you a financial cushion. This money can cover your bills and expenses while you're out looking for a new job or to figure out what your next steps are. Plus, you can take money out of a savings account whenever you need it without penalties. This isn't always true for things like retirement accounts or CDs, where taking money out early can cost you. The right amount to keep in your savings account depends on your financial situation, and that can change over time. So here's a simple way to figure out what you need. You're in consumer debt. If you have high interest debt like credit card debt, it's better to pay that off first rather than trying to save a lot. Now that might seem a little odd, but paying off debt saves you money on interest charges, and with interest rates on credit cards topping 20% these days, that will exceed any gains that you should expect to receive on your investments. You might want to keep a little extra in your checking account with enough to cover your biggest monthly expense, like rent, to avoid overdraft fees and have a backup for emergencies. If your income and expenses are stable and you don't have high interest debt, aim to save enough to cover 3 to 6 months of living expenses. This will be called your emergency fund. Go for 3 months if your job is stable and your expenses are predictable and you don't have any dependents. This amount will help you cover your costs if you lose your income unexpectedly. Once you reach your 3-month goal, consider putting your extra money into a retirement account like a 401k or Roth IRA or something that earns more interest. If your income or expenses are unpredictable, try to save enough for at least 6 months of living costs. This is especially important for self-employed, gig, or seasonal workers, as your savings can help you during slower periods. If you have ongoing expenses like a medical condition or dependents, having a bigger savings cushion can keep you from needing credit cards or taking out personal loans. If you have an upcoming purchase like a home, car, or even a wedding, keep more than 6 months' expenses in a savings account, but not too much more. It's better to invest extra money in something with higher returns, like a retirement account or even a CD. However, if you think you'll need the money soon, keep it accessible in a savings account to avoid any penalties. Yes, you can have too much in savings. Saving money is crucial for financial stability, but it's quite possible to have too much in your savings account. The federal government only insures deposits up to $250,000 per person per bank. You ever pay attention to the sign on the bank door that says FDIC insured? That's what that means. So if you have more than that in a savings account and the bank fails, you might lose some of your money. Also, once you have enough to cover 3 to 6 months of your living expenses, keeping extra cash in a savings account isn't always the best choice. If you're saving for a specific goal, like a down payment on a house, that's fine. But if not, you might want to move that extra money into an account that earns a little bit more interest, like a CD, a 401k, or a Roth IRA to keep up with inflation and to grow your savings. When it comes to choosing a bank, you have 2 main options: brick and mortar banks and online banks. Each has its own perks and downsides. Let's start with the brick and mortar banks. These are the traditional banks with physical branches that you can visit. One big advantage is the personal service. You can walk in, talk to a real person, and get help with your accounts. It's great if you need to handle cash, get a cashier's check, or just prefer face-to-face interactions. Plus, they often have more ATMs available, which can be handy for cash withdrawals without fees. Now, on the other hand, online banks offer some attractive benefits too. Since they don't have the costs associated with maintaining physical branches, they often provide higher interest rates on savings accounts with lower fees. This can help your money grow faster. Online banks also tend to have user-friendly apps and websites, which makes it easier to manage your accounts from anywhere. However, one downside is the lack of physical locations, which means you can't walk in for personal service or easily deposit cash. It can also be a bit challenging if you need help with complex issues, as you'll likely have to rely on phone or online support. Choosing the right bank depends on what you value more: personal service and convenience with brick and mortar banks, or better interest rates and lower fees with online banks. Think about your banking habits and needs to decide which option suits you best. Figuring out how to balance your checking and savings accounts is key to good money management. It's not just about where to put your money, but it's making sure it's working for you too. Keeping enough in your checking for daily expenses and emergencies, while letting your savings grow for future goals, can make a big difference in your financial health. Remember, small steps now can lead to big financial security later. Also, it's about finding that balance and making sure you're not leaving money in idle places where it could be earning more. So take a few minutes today, check your accounts, move some money around if you need to, and set yourself up for success. If you want to learn more about growing your wealth, then check out this video right here. But before you do that, don't forget to like and subscribe. Thank y'all so much for watching. I really hope you liked this video and that you got something out of it. I'll see you in the next one.